So today we're going to talk a little bit about judging sentiment, how we can judge whether the market's feeling a little bit more risk on, a little bit more risk off, and what that means for our trading. So I try to quantify everything, right? And some of the stuff is very hard to quantify, sentiment being one of them. So this is one that you kind of have to look at the charts and play a little bit by feel. So I want to give some tips to that. Now, over at Stats Trading, we have algorithms. They tell us where to buy, when to buy, all this kind of stuff. So we got very, very long over the last few days, and that's been great. So my sentiment's very high right now. But I want to make sure that the market is agreeing with that and looking for some certain things, what we want to see. Now, right off the bat, one of the easiest ways to do this is just to simply take a look at uh, this board, right? This is very green. People are probably happy and sentiment's probably doing well. But we want to look to see what they're buying the most, what is up the most, not only from the close, but from the open as well. So, two exercises that I do around this time every day, which is, about noon, that really, really help with that. So, the first one, the SP 500, I just have this list sorted by how much is up or down on the day based off that list of ETFs that I follow. When I see the top three names, WGMI, which is our Bitcoin miners, I see Bitcoin and I see ARK. That tells me just right off the bat that we're probably looking at a risk on day where traders and investors are starting to take a little bit more risk, a little bit more action into today. ARK is a perfect example because what it's looking for is unprofitable names that may be something in the future. It's not looking at names that are trying to be anything right now. And we're seeing that that is up on the day, again, more than most of these. We can go down the list and it just confirms what we're looking at. Block is just a internet type ETF. We have the semiconductor ETF doing fantastically. We have TAN, we have nuclear, right? All these things are very, very speculative. We go down to the bottom, we start to see things like gold, we start to see things like healthcare, we start to see shipping, these things that are up today, because like I showed, pretty much everything's up today, but they're up way less. And then that's just showing me that people are moving money into the most aggressive stocks out there, the most aggressive things that they can see. Another way to do it is just to simply look at the equal weight versus the cap weight. This is something I talk about all the time. So the cap weighted index, the S&P 500, it gives more power and more umph to the largest names out there. So your Nvidias, your Apples, your AMDs, these names are going to be much more market moving of this sector than the rest. And those are your names that are much more risk on, right? AI is risk on, General Mills and cereal companies are risk off. So if we're seeing that this is outperforming the RSP, which is your equal weighted, then we know that yes, they're buying the big tech names more than they're buying anything else. So when I talked about looking at this from the open, I'm simply just looking at the color of the candle, right? It's green candle, we're pushing up. We're seeing that that is bullish action from the S&P 500 off of the open, not only the close because we have this gap, but from the open. If I go to the RSP, which is equal weight, we have that gap from the from close to open, but now we are actually down a little bit from the open. So we are selling back and we're filling this gap a little bit on the equal weight, which is the same 500 names, but it's not weighted to those big cap names. So it's going to have a little bit more risk off on it when you have large names like McDonald's and Coca-Cola and Lululemon, names that are big and in the S&P 500, but they're not really speculative type names. So seeing those two ways of divergence can tell us what type of market we're on and that the animal spirits are definitely alive. So what do, right? What does this mean for your trading? Well, it means say you're with me over at Stats Edge Pro and five names have come through the algorithm that day, but you only have buying power for one or two, or you're only interested in those. Well, then you could say I'm going to look at the more aggressive names because the market is looking very aggressive this day. Or if it was the other way around, I'm going to look more passively because the market is looking very passive today. That's one way of doing it. The other way is if you're a discretionary trader. You just know that maybe looking to sell some assets that are a little bit more boring, and then buying the ones that are a little crazier. That might give you a little bit more of an edge than trading some of those slower names. So quick, easy way. Took us 2 minutes to kind of figure out what type of day is it. Is it a risk on day? Is it a risk off day? And then how can we potentially trade that and how we can profit off that going forward?